Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, April 26th. We got a few economic items to go over today, unlike yesterday, which happened to be kind of a break from economic data. But today we'll start off with the weekly jobless claims that we get every Thursday. So last week they revised at 1,000 higher people applying for unemployment, which came into 233,000. Forecast for the report for this week came in at 230,000. And it dropped all the way down to 209,000. So great overall numbers that we're seeing here in the weekly jobless claims. Again, these are low. Probably we haven't really seen these type of numbers for the amount of the low 200s since the 1960s, which is really kind of showing you how robust this economy is growing and the good job numbers that we're providing out there as well. Let's kind of move on. We had the durable goods orders for the month of March. So we had a nice increase, as you can see here in February at 3.5%. Forecast was supposed to be 2.5 for March, and it went up 2.6. So pretty good number right there. But if you strip out the defense and the transportation numbers, we get what they call the core capital equipment orders, kind of like our core, inflation that they look at when you strip out food and energy on inflation. But here it's the big ticket items that that could really kind of throw off the numbers, so to speak. So that's why I take out the transportation and defense on this. So in February they had a 0.9% increase, and in March it was almost zero. It came in at 0.1%. So not much improvement for the month of March in this sector here. So let's kind of move on here to the headline news. The stock market's actually up today. All week's been kind of down. Yesterday it kind of ended mixed, which was kind of good news after being down for most of the day. So far today, the Dow is up about 200 and Nasdaq is up just over 100 right now. Now, they're kind of shrugging off, of course, the yield to the 3% range and the 10-year treasuries. But we've had some strong earnings reports come out. We had Facebook that came out last night, which now they're kind of reacting in the market. So technology tech stocks are basically leading the three indexes, bringing up the averages on those. So they're doing quite well today. So let's go see how this is playing out in the bond market here. And the bond market is doing pretty well too. So far we're up about 20 basis points up from where we left off yesterday. We did have a little improvement, but we were still down the day before. Now we're kind of reaching a level where we were the day before in the beginning of the day when it dropped a bit. So we're approaching that here, and we're just above this 100-day moving, this Fibonacci number, which became a first level of support here. And now we're approaching the level that used to be our floor of support, which is now a ceiling of resistance. So hopefully we can break above this and come closer to the 25 and 50-day moving averages. You get back into the range that we were seeing. We've been in the sideways movement for a while, and now it's just kind of dropped over the past 2 weeks here, and or a week and a half or so. So hopefully we can get back up to that way. We can break above this and go up there. Now, what kind of led this? Basically, it was due to technicals. We had basically a crossover on the stochastic chart there, and basically that helped us get into from an oversold position, basically. Same thing for the yields, as you'll see here. We hit this level here, which is the 3.04. We touched that, we went up to 3.03, so just a hair off of it. So far, this is down. We're down currently about sitting at 2.99, just under that threshold of 3% here. And again, this could come back down a little bit as well. Hopefully, maybe down to this level if we're lucky enough. But at least so far, this is kind of holding. And as we kind of talked about yesterday, again, it may come back up at some point and may break above it. But for the short term, it's giving us a little bit of a reprieve here. And the interest rates are improved today. So we got a better rate sheet today coming out for people who are looking for interest rates or locking in or such. But right now, we'll kind of hold off until see what kind of if this continues to improve a little bit further, which I think it might, at least a little bit further in the short term here. All right, so that pretty much wraps up for the day. If you guys want to get more data, just come over to Twitter. You can come over to follow me at Mike Bjork. I do post throughout the day there, like midday, market close. Sometimes something pops up, some comments maybe by Fed members. Sometimes I do post on there. So if you guys want to get that information, again, come over to Twitter. You can find me at Mike Bjork and follow me. You guys otherwise have a great rest of your day. Thanks so much for watching. I look forward to see you guys tomorrow. Bye-bye.